Welcome back. You're watching the opening trade. Now it's time to put the focus on Inox Leisure, where the company again has delivered a strong set of fourth quarter earnings. We saw revenue again jumping by almost 48% versus the last year. Profit decreased, but that again optical decreased primarily because the last time there was a huge tax gain of almost 53 crores. So again, YY comparison, that's why profit is looking slightly lower. Overall, again, it has been a good growth. EBITDA margins have improved. Occupancy has improved again. There has been a good sort of March quarter in the context of footfall. So broadly, company again has delivered again some strong set of earnings here. Let's try and understand again how's the trend looking, how the sort of moving parts within the March quarter earnings are looking like. And for that, let's welcome Alok Tandon, the CEO at Inox Leisure. Mr. Tandon, good morning and welcome to BTVI. First question to you, March quarter, if we look at the metrics across revenue, EBITDA margin, EBITDA growth, net profit growth, footfalls, and also occupancy, all actually have shown again some good metrics. Help us understand the reasons and the durability of the improvement in metrics.
Well, thank you for having me on the show. And just to tell you that we have had a stellar 2018-19, and our numbers are speaking for themselves. Whether it's a growth in ATP or SPH or our ad revenues which have gone up, a lot of hard work and conscious effort has gone behind these results. Our EBITDA has gone up to 309 crores, which is a jump of 47% from the last financial year. Our PAT numbers are now 129 crores, which is a more than 100% jump from the last financial year. And all the effort put in by the team has resulted in these great numbers. Just to add to it, we added 85 screens in the last financial year, and that was a record in the industry itself. We had 6.25 crore footfalls, which was an Inox record. We had 74 rupees as our spend per head where food is concerned, and again that was a record which we created at Inox. So in all operational metrics we have done well, and not to forget the 8th consecutive quarter where our ad revenues have increased and the percentage has gone up.
Right, and Mr. Tandon, let's also talk about ad revenue, something again which adds up to EBITDA margins also. It has shown strong growth. We, in fact, if I look at the metrics here, that's telling me it's a 29% growth in the fourth quarter. If I look at FY19, it's a 27% growth versus the last year. What about the sort of ad revenue growth here? Was it about higher ad price or higher ad volumes?
Well, let me tell you, in FY 18-19, we had this go-to-the-market approach. We had lots of feet on street. We had people sitting with media managers to find out innovative ways to advertise their products on our screens in our lobby and the real estate which we had in our cinema halls. We had new ways of engaging with our guests so that they could we could go back to the advertising agencies and tell them that how effective their ads have been. So a lot of work has gone into ensuring that our revenues keep on increasing where ads are concerned. Our effective rate for the advertisements went up from FY 18. So per minute, the charge which we had in FY 18 was substantially increased in FY 19. And yes, you rightly said that a part of it is also because of opening new screens in the last financial year.
Right, and staying on the screens, you added about 28 screens in the March quarter. That's a good sort of run rate. For the full year also, again, the screen addition rate has been very robust. How's the FY20 target looking like? Another 70 to 80 screens, can we expect that sort of addition?
Well, let me tell you, I will not talk about what we are going to open in quarter 1 or quarter 2 of this financial year, but I would like to say that our endeavor is to open 80 screens in this financial year in for FY20. And we've already opened 2 properties and 9 screens till now. And today, the 13th of May, we have already opened 9 screens. And we are very, very sure that we'll open another 71 till 31st of March 2020. Going forward, we have signed about 850 screens. These are screens where the documents have already been penned and signed. And in the next few years, you will see Inox opening these screens and adding to our entire kitty.
Okay, and since screen addition again requires investments also, but your balance sheet again is telling us you're net debt free, and that's the positive part here. But any plans to raise funds for faster expansion?
Well, no plans as of now. We are proud to be a net debt-free company. We have got a strong and a healthy balance sheet, and we are looking at internal accruals for expansion. And this is something which we are very proud of as a company, that and even being net debt-free, our expansion has continued. We have opened 85 screens in the last financial year, and that will keep on happening.
Very interesting part I think investors would like to know, has the trends of the EBITDA margins changed firmly, structurally? If I look at the fourth quarter, it's 20% EBITDA margin, but that's also a function of higher occupancy. If I look at FY19, we're talking about 18% EBITDA margin versus 16% last time. So are we talking about a 20% or higher EBITDA margin trend, or somewhere between 18% about again, that should be the normalized margin levels for FY20 also?
Well, I would say the quarter has been good, and even the effort leading to these margins has been substantial. A lot of work has gone into improve our EBITDA margins. Yes, top line adds to everything, but at the same time, how we have controlled our costs, how we have ensured that our occupancy trends keep on increasing. So all that is a function of the EBITDA margin, and this is something which we as a company are endeavoring to do and keep the pedal pressed hard, so that the margins keep on increasing.
Right, and Mr. Chandan, let's also talk about the June quarter. March quarter was good. Again, your movie slate definitely again tells us what could be the impact from the movies. In the March, you had Uri, Simba, Total Dhamal, Kesari, and all that basically contributed to footfalls there. And as our screen is telling us, Avengers has seen some strong collections in the June quarter. What we should be expecting from the June quarter, given the fact Bharat is also going to come next month. So should we expect a strong June quarter from you?
You know your teams, you know your missions.
Well, again, I will not give you a flavor of the quarter, but I'll just tell you that Avengers was history. It just created history. The number of shows we had, the number of houseful shows, people thronging into our lobbies, dancing. It was like a carnival. It was like a festival going on. And movies like this, I would say, come not at regular intervals, though we would love to do it. The last movie which I saw such frenzy was Bahubali, The Conclusion. And this movie again, the hype about it, and there are people who watched the movie 3 or 4 times, whether it was an early morning show or a late night show. And to add to it, the formats which we helped, or which we have, people tried various formats. So there were people who watched Avengers in IMAX, they watched movie Avengers in Insignia screens, and also in MX4D. Just to experience that movie in different formats was a big thing. And as we said, that Q1 till now with Avengers where it has been quite good. And hopefully it should be a good quarter where the movies lineup is concerned.
Definitely, again, since you're already telling again, that was a sort of historic movie again for you. So collections from that, and then the Salman Khan movie perhaps is something which is going to raise hopes for investors. But lastly, any plans for fresh acquisitions? You have done a couple of acquisitions over the last many quarters. Any plans for any fresh new acquisition?
Well, we are just concentrating on organic. We have done 3 acquisitions till now, which was in 2006-07 of CCPL of West Bengal. Then 2010 we acquired Fame India Limited, and 2014 we took over Satyam Cinemas of Delhi. So we have done the 3 inorganic acquisitions, and going forward we are not shy from acquiring a company. We are not shy of it, but as of now the focus of the company is only on organic growth.
Mr. Chandan, thanks a lot for joining us, and indeed again all the wishes to you for the June quarter, which so far looks like it's promising to be a very strong quarter for you. So that's the Inox interaction today. Maybe again 1% down, but let's flip the chart into a sort of a 6-month chart. Let's see again how in the last 6 months the stock has done. March quarter was definitely very, very good, and 39% returns already delivered in the last 6 months. Again, no surprise if the after results again not seeing any major fireworks, because before that the stock has done a lot. And the June quarter, as he has just indicated, Avengers were very, very strong in box office collections. Bharat, another big ticket movie. Student of again another one, again Student of Year, again part 2 again. So that perhaps could also be promising another one. So again, watch out for the stock. And now let's